Good afternoon. Welcome. This is Craig Modelmog, Wall Street X's and O's, to the March Madness edition of X's and O's for the week ending March 12th. I'm fired up, although I did receive some very disappointing news. My KU Jayhawks today did have a positive COVID test, so they are out of the semifinals of the Big 12 tournament. Kind of like Duke. Duke blew up yesterday. They say they're done. And this is kind of one of those years. The COVID has really put lots of wrinkles into life, has it not? I can attest to that. But anyway, welcome. To kick things off here, got a great show today. The normal disclosure, all of the information, opinions on this show are mine, that being Craig Modelmog. They are not a solicitation or to buy or sell any investment. Investments can and will lose money, and they are not FDIC insured like your money in the bank. So without further ado, we're going to kick things off. I've got some March Madness tips, being we're kind of on the cusp of picking our brackets. If you never picked a bracket, hop on ESPN. You can do it for free. It's fun. You know what? You never know. You might win. If you're with your friends, my brother always runs one, and it's just fun. So super excited. Got some economic news. Going to touch incredibly briefly on unemployment. I'm going to focus more on performance thus far this year, and I'm going to call it the yellow light, saying don't go, don't stop, slow down. That's what we're going to finish up with. So anyway, to kick things off, here are some March Madness tips. And as you can see, this is my State Farm net hat. I had the good fortunes of going to college game day at Allen Fieldhouse 2 seasons ago, and they passed these out. And on occasion, I bust it out. This is my net hat. So you know what? You could say it's your dunce hat, which, that would not be a shocker if someone said that or thought that. But, it's my net hat in honor of March Madness. So anyway, first round, only one number one seed. So take notes here. You can replay this. Here's some things to help you pick your brackets. Okay, only one number one seed has ever lost a first round. Virginia. Sucks to be a Virginia fan in 2018. They're supposed to win it. They got beat. Anyway, since 2014, only number one seeds have won 15 of their last 16 games. So that's kind of a given. That's in the Sweet 16. So you get to the final 16, number one seeds have won 15 of 16. So if you have a number one seed in the Sweet 16, pick it. Okay. The Elite Eight, since 2012, number one seeds have combined for 12 and 9. So one of them will probably fall. Okay, so if there's 3 number one seeds in the final 8, one of them is going to get beat from a probability standpoint. Final 4 in the last 5 years, only 2 underdogs have won a semifinal game. So go with the winners, right? Championship game, 21 of the previous 22 NCAA champs have come from East Coast time zone. I thought that was kind of interesting. Here's some picking upsets, okay? First of all, the average number of upsets in an entire tournament is 12.7. This goes back for the entirety. The least number of upsets were 4 in 2007. The most number of upsets were 19 in 2014. You get to the first round, on average, there's 6.1. The least number is 2 upsets. The high end is 10. You get to the second round, it's 3.6. You have 0 upsets, which happened on 4 occasions. You had 8 in 2000. The Sweet 16, you get to 1.7 upsets on average, 0 on 5 occasions, 4 in 1990. The Elite Eight, 0.5, 0 on 10 occasions. The most is 2 on 3 occasions. You get to the Final Four, 0.2. That means there were 0 upsets in the Final Four in 24 occasions, and only 2 in 2014, which was a strange year. So you know what? All in all, as the tournament goes on, stick with those picked to win. Moving on. Going to unemployment here. This is real quick. A pretty uneventful week. Total number dropped a little bit as far as new filings. total people. Unemployment ticked up a little bit. Okay, really not that big of a deal. Probably bigger news, Biden signed the stimulus package. Historically speaking, every time they've signed one of these deals, it really doesn't impact the economy. Will this time be any different? Probably not, but we'll see. Yeah, time will tell. Equity benchmarks, we had the Russell 2000 set a new all-time high. We had the NASDAQ and the S&P begin to set lower highs, and I'm going to hit on that as far as the yellow light syndrome. Don't overthink this, though. Don't overthink this. I'm not getting uber negative on you here. Let's go to performance year to date, and this is really kind of cool. Year to date, the number one asset category or asset class from a performance standpoint is commodities, GSCI commodities. Do we own commodities? Yes. Have we owned commodities for a while? Yes. Number two in line, and that is actually at 16.49% for the year. That's impressive. Emerging markets come in at second at 4.88 year to year. The NASDAQ, 2.36. You Apple and Tesla owners that think, oh, I bought Apple and I'm a genius and it only goes up. Ooh, I bought Tesla and I'm a genius and it only goes up. Wrong. Wrong. Not everything goes up all the time, as we're learning. The Ifa Index, which is developed economy, it comes in fourth at 2.2% for the year. The S&P is only 1.72, and this is through February. Okay, the U.S. dollar up 1.1, which has been kind of interesting because I've been short the dollar for a while, although I just pulled that off this week, so we are now long dollar temporarily, I think. The Dow's up 1%. T-bills. Here's your people that own bonds still, and this makes it challenging. Okay, T-bills, which if a little quick history lesson on bonds. Bills are short term, 0 to 272 days. I know, interesting. They were flat year to date. Barclays Ag, which is broad bond market index, minus 2.15. Gold, minus 8.85 for you gold bugs. Ouch, I know that hurt. Pull the stick out of your chest. The worst performer year to date, Treasury bonds. Bonds are long term. T-bills short term. Notes intermediate term. Bonds long term down minus 0.897 year to date. Let's get to sectors. This is some good stuff here. From a sector standpoint, what do you think might be the number one performing sector of the S&P 500? Going back to what I just said about the top performing asset category. Energy. Energy's up 25.88. Financials up 9.22. Communications up 4.58. Industrials tip the number at number 4 on performance, up 2%. Real estate 1.91. Materials up 1.1. Tech flat 0.09. Consumer discretionary minus 0.62. Healthcare minus 0.96 despite the vaccine successes. Consumer staples minus 0.6, 0.74. And leading the losers, utilities at minus 7.44. To close this out here today, I've got two things. One, from an economic standpoint, I'm calling it yellow light, okay? What I really think is one of two things are happening. From a probability standpoint, I think it is option A, which is we are going through a rotational component or a rotational time in the markets. Losers become leaders, leaders become losers, okay? Does that mean that's what's going to happen moving forward? Time will tell. But right now, I think from a probability standpoint, what we're seeing really get hit, momentum, the Qs, which is tech, the NASDAQ, QQQ, small cap growth has gotten smoked, okay? We've seen them bounce back here a little bit the last couple days, but still, what is performing is what was lagging, okay? And we usually see that kind of shift. Going forward, is that what's going to continue to happen? I don't know. We're going to find out, but I think what most likely this is a rotational period in the markets, all right? We still have a Fed that's very supportive. We have another stimulus package. We have COVID vaccines starting to ramp up. We have hiring, which will begin to ramp up. You know, I've talked about the labor component. I think that is going to ramp up, and we are going to have Q2, which is going against some of the weakest comps on history. We're going to have great quarterly performance numbers when it comes to revenue, when it comes to earnings. We're going to have a good couple quarters. I think that drives the market higher most likely. I think by the end of March, we're probably setting new highs. Okay. Now, if things would happen to deteriorate further, which I do not think will, but it is possible, the data will reflect that this is the beginning of the end. When I say the end, I'm talking about going into another time when we have a deceleration in what's going on in the economy, and we would see a reversal in inflation. I do not think that is going to happen yet. Key word, yet. Do I think that will happen this year? I actually do. I think the end of the year could be tough. Again, but what we're going to do, we're not going to make emotional decisions based on narratives. We are going to make sound, fundamental, data-driven decisions. Emphasis on data. Right now, what is the data showing? I think the data is going to show things are going to start to pick up again, and we should see things resume a nice kind of path forward. It may be different leadership, though, which would not surprise me. We're seeing the breadth expand. If you remember last year, I talked a lot about how the S&P and the NASDAQ was really driven by your FANG companies, which is Facebook, Netflix, Apple, Amazon, Google. Those were the ones that were driving everything. That is not the case now, and a couple of them are actually negative year to date. So we may see a little changing of the guard, which would be healthy actually for the markets on the short term. Okay, to close it out here, those states with no statewide mask requirements. We have Alaska, Arizona, Idaho, Montana, North Dakota, South Dakota, Nebraska, Oklahoma, Texas, Iowa, Missouri, Mississippi, Tennessee, Georgia, South Carolina, Florida. That's a big number. Here's the deal. In my opinion, I think it's too early. That's my opinion, okay? It's going to be interesting to see how, as states continue to reopen, a couple things. You've got this teeter-totter challenge where you've got states reopening, which is going to help the economy. You're going to see revenues, you're going to see spending, you're going to see retail strong, okay? On the flip side of that is you have the COVID thing. Do you know that there are 4 new main variants? There are hundreds actually globally. There are 4 main ones right now that are making up almost 40% of those new cases in the United States. All of them are more contagious. So this is going to be that tug of war that's taking place between reopening and COVID. Who wins? Stay tuned, people. It's going to be exciting. Anyway, for those of you that live on the Front Range of Colorado, sharpen up your shovels. Sounds like we're going to get smoked. I'm kind of excited. I love snow. I hope the ski resorts get it. I'd like to go skiing a couple more times. Anyway, it's going to be interesting. It's supposed to come in tonight through Saturday and Sunday all day. Stay home. Be safe. There's lots to watch on TV. If your basketball team's playing, watch it. Lots of movies, reruns, etc. Stay home and be safe, okay? There's no need to get out. Those of you that live outside of Colorado, hopefully you have a nice sunny weekend. But anyway, for Wall Street X's and O's, this is Friday, March 12th, Craig Modelmog. I'm coming back, feeling better. COVID only kept me down for about 5.5 weeks, but it's okay. In honor of March Madness, pick your teams. Got the net hat I'm sporting, and I love you guys. Have a great weekend. And guess what? I am out. Love you guys. Later.